Hello, everyone, and welcome to another episode of Cannabis Unlocked. Today, I'll be your host, Jordan Euclid, one of the founding partners of Key Investment Partners. Today, I'm very excited to be joined by my friend, Andrew Lobo, the CEO and founder of Kinslips. Andrew, how are you doing today?
I'm great. How are you, Jordan?
Doing great. Thanks so much for joining the podcast today.
Yeah, thanks for having me.
Absolutely. So to kick things off, Andrew, why don't you start by telling the audience a little bit about yourself and your career background and how you ended up getting into cannabis?
Sure, happy to. So I come from a more of a financial and business background. Traditionally, I went to the University of Richmond in Virginia, studied business, studied computer science, and back when I was graduating, it was the hot thing to go to the finance market, and started a career in investment banking, working on Wall Street for a couple of different firms over time. Started at Wachovia Securities, investment banking, real estate investment trusts, and then went from there to a private equity firm called Allied Capital, where due to the recession, it was mostly workouts and turnarounds, and it's really tough investments. But it was a really good learning experience, digging into businesses at the bottom of the cycle and figuring what can be turned around and what couldn't be. And from then from there, I went into the leverage credit world to a company called Ares Management in New York. Went there and did similar work, learning about being a generalist, investing in businesses across cycle and across industries. And continued down that path with GE Capital and GE Antares Capital, and eventually to Apollo Global Management. From there, it kind of came out of left field. An opportunity came into recruiter to work for a kind of a super innovative, ahead of its time cannabis company called Olo at the time. And it was based in Northern California. And I kind of took the opportunity to kind of vet it and go through it for a few months. And the cannabis space had been intriguing to me. I just didn't know how I wanted to get into it. And most of the companies in it were doing stuff that was really basic, just taking the illegal brownies and chocolates and whatever and gummies and just making illegal brands of those. And it wasn't that exciting for me. But this company was doing something totally different. It was making an oral thin film sublingual strip. So think of it as a product that goes under your tongue and absorbs in 5 to 10 minutes and gives you a smoker's high in probably the cleanest format you'll ever get. And that was really interesting to me. And it was a young entrepreneur who needed a business brain to come in and help run his company. And it's something I had always wanted to do. It was great to be an investor for many years, and I still do that, and it's a lot of fun. But I wanted to see if I could take all the skills that I had learned and apply them into a real business, and kind of build it in a true vertically integrated business with distribution and manufacturing and sales team and everything. And so I did that, and it went well. And Olo was, a good brand, but it was in a very competitive market. And when COVID hit, we lined up and merged with our direct competitor called Kinslips. So from that, that's how I now have Kinslips on my resume, and that's where I work today. So when we merged the two companies in the middle of COVID, which is a whole other story, and it's tough to do that in a remote environment for the most part. But bringing two teams together, I take that leadership role. I do the CEO and CFO roles of the company and a lot of the operational work. The two founders of Kinslips are still on the team, and they're great, and they focus on product and revenue and business development. And then we brought half their legacy team members and half our legacy team members on the team. So and we moved into the old Olo facility in Northern California in Richmond, and we manufacture all of our own products there and sell them into the California cannabis market.
Fantastic. That's exciting. And so what type of product SKUs are you selling today?
Sure. So Kinslips was really born out of science and thinking about like the actual effects the user is going to get and trying to get them to have a very consistent effect. So right now, every SKU we have as of today is a sublingual strip. We'll see how long that stays, but that's our core competency. It's our bread and butter, is that we have mass production ability to produce, frankly, at a national level, sublingual strips that are cannabis infused. And what we have on the market is, at this point, we probably have about 8 THC-based SKUs, 8 THC heavy SKUs, 8 to 9. And whether they're either 5 or 10 milligrams of THC in a strip, infused with a terpene profile. I'd say half of those are experience focused. So we give the user a euphoric experience in our Cloudbuster product, which and boost their creativity, which artists and computer engineers and software engineers really love. It's very, many of these products are very much tailored for the for those end uses that boost your workday or the fun side of things. People use them in both. They're kind of dual purpose. They're not meant to knock you out by any means, like some of the other stronger edible type products. So we have those, and then we came out with the Flowerful line in the last few weeks, actually, which is the first brand to successfully deliver a single strain experience because of the sublingual delivery in a non-smokable and non-inhalable format. So that's something that's really exciting. We put that out, and then kind of where we've really done really well is our sleep product and our CBN CBD shut ice product. It's no THC. It's a wellness product. It's done incredibly well, and people have used it, kind of swear by it. It's something that gets them to sleep and gets them back to sleep if they wake up in the middle of the night. And last, we have a high CBD product for pain and relief. So that's kind of the portfolio of what we have today. And then we sell it probably, between 100, probably regularly in probably 100 dispensaries in California, and then in and out of probably 250 over time.
That's great. And so for folks who may not be familiar with a sublingual strip, would that be comparable to like a Listerine strip that people may be familiar with?
Physically and aesthetically, yes, it looks the same. The big key difference is that a Listerine strip there's not really an active ingredient or a drug in there. And the second key difference is that a Listerine strip is the instruction will tell you to put it onto your tongue. Whereas a sublingual strip, from the Latin words sub and lingua, mean under tongue. And so you would put it at the bottom of your mouth, put your tongue over it, just let it dissolve in 20 seconds. And it'll go into the bloodstream through the membranes in the bottom of your mouth and the bottom of your tongue. It'll skip the entire digestive tract in first pass metabolism, and you'll get a Delta-9 smoker's high from the product, or you'll just deliver it, the CBD or CBN into your bloodstream faster and more effectively, and without losing much of the bioavailability to the stomach and the liver passage.
Great. That makes sense. And what was it that led you and the Kinslips team to focus on this category?
We were thinking about ways where, honestly, we none of us really enjoy edibles, traditional edibles. There's just the drawbacks were just all over the place. It's too long. It's a different feeling and effect profile than smoking. And then you have to add something to your diet, or you have to eat a product that doesn't taste as good because it has cannabis in it, or you have to add calories, you have to add fat, you have to add something that or artificial ingredients to your diet. And so we said, what if we could do it in a all natural way, give somebody a smoker's high without having them have to. And we're not saying we want to wipe out smoking by any means. I think that's a common form of use. But what if they had an alternative during their day, like during their work day, or on the weekends, or something more discreet, when they're traveling, that they could take with them to give them that same experience, same high quality experience that they're used to, potentially from smoking. So originally, the original thought when Josh formulated the product, one of our co-founders, is that he started with a gum. He started like a chiclet style gum, and putting the infused cannabis into the kind of the candy layer of the chiclet, and it kind of didn't work because the cannabis bound to the gum and didn't release into the person's mouth. But from that, he realized, like, if he could come up with just a thin layer that was like kind of the candy film of the chiclet, he can make a really great product and get it released without binding to the gum. And that's where he went to thin films. And so, having studied the sublingual category and the delivery method a lot, he realized that was probably the only way you could get somebody as healthy a Delta-9 dosage. Besides, obviously, the things that people never want to do is nobody wants to do injectables and nobody wants to do other stuff, right? But that's the only easy way to get a consumer that same high quality high without smoking or vaping.
Got it. That makes total sense. So you mentioned that you're now in over 100 dispensaries around California, and you recently announced a partnership with Herbal to serve as a distributor for your products. And so I'd love to hear more about what drove your decision to work with a third-party distributor instead of self-distributing your products.
Sure. For us, we had a history on and off of self-distribution, third-party distribution. For the most part, in the more recent years, we had gone to third-party. It's a smaller brand. in terms of our number of people. We're very machine efficient. We have machinery that enables us to do the same thing that another company would do with 10 employees. We do it with 3. But on the distribution side, California is a big footprint. It's a big investment to go into vehicles and logistics and to really build out that license. And we thought about it as until the sublinguals category grows a little bit bigger, and unless we add more products to the portfolio, it makes sense to be cross-selling a bunch of stuff with a dedicated sales force. We'd rather do the internal sales manager plus a third-party sales team that's built and it's scaled to get into these dispensaries. And with herbal, we're thrilled. Yeah. So in selecting herbal, what really surprised us is how well run an organization they are, and I think it comes from having really good institutional roots across top tier distribution, alcohol and beverage, logistics, and other sales organizations they have, mixed with good knowledge of cannabis and the products. And what the other piece that was very appealing to us about them is that they don't own any of their brands. They're truly an independent distributor that is into building their, but just their bread and butter is making good relationships at retail and good relationships with the brands and not really favoring one over the other. We really like that. We really like the team we went through. We went through almost 9 months of diligence with them for them to understand us and us to understand them. And the fact that it was thoughtful enough to go through that process is quite different than many of the other things that have happened in the California distribution market, where distributors come and go, fly by night type of thing. So we're thrilled to be with them. We don't really compete as a product against any category they have on board. And that's kind of the big thing is their salespeople have no conflict of interest when pitching Kinslips to a retailer. So
that makes sense. And so Kinslips today is focused exclusively on the California market. And obviously everyone knows it's a huge market. I believe 5th largest country by GDP if it were its own nation. However, obviously the cannabis industry has struggled in large part in California because a lot of constantly changing regulations, a lot of dislocation between regulations at the state versus the municipality level, obviously a very strong illicit market in the state. So with all that said, I'm curious, what has been Kinslips' experience working in the state, and how has the market landscape evolved over time within California?
Yeah. So what I highlight actually were, a bright spot for us, a very bright spot for us is we've actually expanded the brand into Canada through a licensee, Aleafia Health. And this is a good point to contrast California, where Canada's got the regulatory act together pretty well. I can tell you just from Aleafia's public announcements and from the data we know that Kinslips is doing incredibly well there in a market where it can be marketed properly. There's a proper distribution and retail system and medical clinics and all of that. And it's the top sublingual in Canada. So it's done incredibly well in that type of environment. And so kind of to contrast that to California a little bit, the Kinslips has done well. It's found its consumer base, but I think what the struggle has always been is getting the education to the consumers through a distribution and then through a retail channel. And then on a more advanced product, it's very tricky to get that information to consumers at the point of sale. With limited advertising and marketing restrictions of what we can do and social media crackdown, it's very hard to do it. So we've worked on building a newsletter. We realized we really try to get people onto email, because from there we can really explain things. They can really see the graphics and the videos and all that, and really get them to understand why this is a superior form factor for them to be using in their cannabis consumption. So I think that's one thing that we've been doing to work around some of the intricacies in California. The taxes and some of the other stuff are high in the illegal market and all of that. That doesn't, the taxes absolutely affect us like everybody else, but the illegal market less so for us, because we're so far away from, it's so complicated for somebody who's in the illegal market to make the infrastructure and the build. If you were gonna build that out, you might as well just build it in the legal market. It doesn't make sense to get busted and lose millions of dollars of equipment. So it's a different game for us in that aspect. but I think what's nice, where I see the California market, where it was before, is there were a lot of distributors. None of them were at scale. You have just a lot of subscale companies across the board, and what actually has driven much of that is these high local fees and annual fees and taxes. Effectively puts businesses that would be at scale somewhat subscale, because just to get over your operating expenses that are heavily driven by local and state taxes, it's a lot harder than it would have been otherwise. But I think what we've seen in California is that the dispensary have been coming online, not at the rate we would like, maybe between 800 and 900 still. And so much of the population is just too far. But delivery has been a nice outlet for us. We do particularly well in delivery. Companies like Herbal and then their retail customers who have delivery services love us because we're probably the lightest and temperature agnostic product on the truck. So that's a very good environment for us, and the units are very small. So thinking about where we see the market going and what's happening is we continue to see the delivery guys continue to do well, and they'll consolidate for logistics and scale over time as well. And then what we've seen is the retail is consolidated at a rapid rate. We're starting to see that happen now. There are some very well-run retailers that'll do well in the long run, again, and be independent, and that's just a quality to how good their management team is. But for what we've been witnessing in the M&A market is just not so much all the MSOs, but a few of the MSOs that have come to the state have started gobbling things up. Some of the California single state operators, the ones who have really taken the opportunity to put deals together. You see a flight to somewhat having them listed on some sort of parent company of all of them be public. I think there's some advantage to be able to tap even a thinly traded retail public market for some of these investors, where they just can't take that much more private capital in these big structures, and they need something a little bit cheaper. So you're seeing that, and I think that is net positive. The consolidation for us, not because we don't like being in 100 different brands and dispensaries, but it's more for systems and process. We learn how that we have to onboard into Caliva, and we know the system for Caliva, and we know it for Urbana, and we know it for MedMen, and we know it for the top accounts that we're in, and we don't have to go relearn 100 different systems and the quirks of each retailer. So it's nice in that way for us. It's also easier on the sales side for us that win institutionalized big relationships with top tier retailers that'll be longer term, and kind of just carry those from the long run and grow with them rather than trying to go and pitch and win every single account one by one. So there's a nice trend for brands in there. That said, we still do the work. We still service a lot of small dispensaries that have been loyal to us. So it's a fine balancing act between wanting it to be simple versus wanting to not have all your customers just be rolled up into one company.
Sure.
But to your point on the pricing, the flower crash, that's an interesting dynamic that's happened in the market. I'll tell you that obviously on the surface, you'd say we're probably the last company that would be impacted by the flower crash, right? Because we're so far from the low value add, which is less value add, which is flower growth and just drying it and putting it in a bag, to the very end of the value chain, which is us, which is the most value add, is having processed, put it in all natural formula, put it individually sealed, and sold to the higher end consumer that really understands the technology and the value proposition. So but unfortunately, we're all, whether you're flower or you're a sublingual strip, you're reliant on the same retail channel. And when the channel gets messed up because of working capital issues at retailers, because they have too much flower, which they have to fire sale out, and then consumers make the trade to the discounted flower over the vape or whatever or edibles, just a bigger portion of their wallet or their usual spend goes towards a highly discounted product for a period of time, which kind of messes up the whole market for everybody. So I think we saw some impact of that in the fall, and then retailers slowly coming back off AR/AP holds with their distributors, and being able to buy product again, because that was the second domino that kind of fell with this flower price crash. In the longer run, in the medium run, it's actually very good for us. I think the input prices will go down. Distillates, isolates, live resins, all of those we can use in our products. And so I think that'll be good. It's more about just a short-term cash crunch issue with the retail channel that backs up everybody's sales.
Mm-hmm. That makes sense. And so over the next, call it, 2 to 3 years, what is next for Kinslips? Will you focus on more doors in California, more state expansion, more SKU expansion? What are your thoughts?
Yeah, there's a lot. And I'll tell you what I can share with you. The exciting stuff is Canada's going well and continuing to build that relationship with Aleafia, and to expand with them around the globe as they get opportunities to is something that we're pretty excited about. They've done a phenomenal job in Canada, and we want to continue with them. Mexico is on our radar of countries that we want to get into. It's one where the regulatory policy is not there yet for us to know where sublingual strips will play. But it's one where we've already started very early talks with potential business partners down there, probably to do it on a similar licensing basis. And then the US, we have started state by state conversations here and there. I'll tell you there's a lot of diligence, a lot of work behind those, particularly for us, because we have a low cost format to build out infrastructure, but we certainly we're very much at scale in California, and to get to the same scale in each state may not make a whole lot of sense. It would probably do a lower scale, higher labor type equipment set up there. But we do like a few of the markets in the East and Oklahoma and some of those places, and have had our eye on them for a while. Obviously, the big ones we'd love to get online are New York, and maybe at some point Texas, but we're all waiting for that. So that's kind of what that's the cannabis side of the business. And then what's exciting is we're working on forming a venture to take Kinslips into the hemp market, and really use some of our market leading formulations and compounds to try to build a brand on more of a direct to consumer basis, to sell to kind of the national demand for Kinslips, sleep and pain and all those type of products. Which we've always had, and we've always get many of our inbounds, because our PR and our track record has been so good in California, that many of our inbounds come from out of state, people seeking products in Florida and the retirement or pain or sleep markets and stuff like that, and New York, and people who work late nights and they need someone to sleep living at home and stuff like that. So it's we think we can take wellness products and really dominate on the national scale, starting with hemp, with a plan to eventually have the hemp business build the Kinslips name even further on a national basis, and vice versa, with the California cannabis business continuing to build in the retail channel in California, and kind of build a brand across the nation with these two different kind of synergistic and symbiotic businesses.
That makes sense. And Andrew, what do you think will happen longer term within the brand landscape? Do you expect there will be significant consolidation? Obviously we saw the Canopy and Wana transaction a few weeks ago. So yeah, do you think that there will be much more consolidation? If so, who do you expect will be those consolidators?
There will be. I think everybody in the brand side is, you see way more consolidation on retail, distro, and maybe the lab side too, in testing. You're seeing a little bit, but I'll tell you that I think people have been gun shy on brands because nobody knows how to value them. And everybody knows, at least in California, how choppy the retail channel is, and believing in brand sales and believing they'll still be there. We've stood the test of time. We're around year 5, but I can tell you the companies that were there in year 1, many of them are gone. Many of them are gone. So I think people are still a little gun shy on brand acquisitions. You're seeing maybe the really, really big guys, like a Wana will do a deal, Sublime will do a deal. People who are like top 3 in their category. We're a top in our category, but it's just thinking about the people. You're not seeing a lot of mid-tier acquisitions of brands that kind of are just in the middle of the road. I think people would rather just let them kind of just roll on and let them prove themselves than take a shot at an acquisition. And only as there's a flight to probably top tier assets on the brand side. So you'll see the Sublimes of the world roll up into a Harborside and stuff like that. But you won't. I think there will be consolidation, absolutely, but it's I think people can kind of see through which brands are real and which ones have value add on their product level and which ones have barriers to entry versus the recreation cost if they were to try to just come in a market, use money, and just recreate that brand. But I do think California brands have a huge advantage. I think there is something to say about the weight they carry as they go across the country.
Absolutely. And what do you think is the value of being a California brand first?
I think it's you went through the level of competition that's unreal when you compare it to any other state. I think what Kinslip's product was 5 years ago versus what it is today it's totally different. You wouldn't recognize it. It's the quality of the strip and the quality of the product you put out. And part of that's our own standards and us continuing to improve. But part of that is the market standards. We had to wipe out or beat out 3 or 4 other sublingual strip brands to be where we are today. In other states where it's limited license or there's only 10 sublingual brands or whatever, they're not being pushed every day. We're being pushed every day by retailers, but telling us this is what needs to happen. If you want to be in here, you need better packaging, you need better taste, you need whatever it is. And we get pushed every day in California because new brands keep popping up here and you kind of have to be on your game all the time. So I think that is part of it. I think the second piece of it is that we fit the aesthetic a little bit more of the healthy California lifestyle, being one of the only all natural products in California, being a sugarless, vegan, all natural, 0 calorie product, 0 sugar. We fit that California lifestyle aesthetic that many people, whether or not they can actually restrict, can die to that in wherever they are in their regular life, at least in their cannabis use, they kind of aspire to it on a national basis to be that healthy, sunny California lifestyle. So we fit that well, and I think that goes a long way. And then I think lastly, I think it's people want products where they've come from very tested markets, where there's not where it's gone through kind of proven R&D and proven lab tests and compliance and all of that at some point, and they'll see a product that's gone through all of that versus a brand that's just started up and they think they're rolling something in a joint. You don't really know what it is. So,
sure. Got it. Well, Andrew, this has been such a fun interview. I'm curious, do you have any requests from the audience? Obviously, if they're in California, to go check out and look for a dispenser to get Kinslips, but are you hiring or anything else? Any other requests?
Sure. We love to get feedback. Take a look at kinslips.com. You can order if you're in California, it'll be delivered right to your home. And we'd love to get feedback on what experiences in cannabis products you like, in formulas and ratios and stuff like that. And just drop us a mission so you can get them delivered directly to your home in California. And we'd love to hear about the next cannabis experience that you like. If it's a different type of sleep product, a different type of pain product, if it's a ratio of THC that you really like, drop us a note to info@kinslips.com. We'd love to hear about it. We're always formulating for what our users love, and we've done that in the past. It's worked out to our benefit and to theirs. And then also, if from the investment side, we're actively fundraising to get Kinslips Essentials, the national hemp business, off the ground, and we'd love to hear about if you're an individual who's passionate about science forward-thinking brands that have a chance to really change the game of consumer wellness. We'd love to hear from you.
Fantastic. Well, thanks, Andrew, and really appreciate you joining the podcast today. Have a great rest of your Friday.
Awesome. Thank you, Jordan. Same to you.
Take care.